Hi investors, the wait for IPOs is over. The first IPO of 2022 is on your doorsteps. Omni-channel payment provider AGS Transact Technologies, which provides end-to-end cash and digital payment solutions, is all set to raise rupees 680 crores from the public. A point to ponder is why the IPO in this year has taken such a long time. Why the IPOs have been delayed when investors were willing to lap them up eagerly. We discuss more of this in the assessment portion of this presentation. Timeline of the IPO. The IPO opens on 19th January and closes on 21st January. It's entirely an offer for sale, mostly by the promoters. Face value is rupees 10, issue size is 680 crores and bid lot is 85 shares. The price at the upper end is rupees 175. 35% of the offer is reserved for retail. Looking that the IPO is not priced so attractively, investors may get an allotment in the IPO. About AGS Transact Technologies Limited. AGS Transact Technologies is country's leading integrated omni-channel player. It provides digital and cash-based services to banks and corporate customers. It's the country's second largest in terms of revenue from ATM managed services. It's also the largest deployer of point of sale POS terminals at petroleum outlets of companies like IOCL, BPCL, etc. Besides providing customized products and services comprising ATM and CRM, which is cash management services and digital solutions, it offers merchant solutions, transaction processing and mobile wallets, and a few other services like transit and toll services, fuel automation services using RFIDs, and color auto refill services like for paint industries and all. Last year it clocked about 100 crores from this color auto refill services. But the focus area of the company continues to be ATM, cash services and digital payment solutions. The company has deployed its POS terminals at various petroleum outlets across the country and has rolled out its integrated solutions at more than 16,000 petrol outlets. AGS Transact services can be grouped under four major categories: digital payment, ATM outsourcing, cash management, and banking automation solutions. The customers in payment solution segment include ICICI Bank, Axis Bank, HDFC Bank, and Federal Bank. In fact, now it serves more than 24 banks in this segment. ATM management services represent 46% of the total revenues. Cash management services account for 13%. ATM management and AMC services for outsourced ATMs account for 2/3 of the revenue and is the main cash cow of the company. Its portfolio consists of about 14,000 ATMs and cash recycling machines, that is CRMs, under outsourcing business, and about 19,000 ATMs under managed services business in India as on August 2021. The company also provides outsourcing solutions to some ATMs and kiosks in Sri Lanka. The company provides cash management services to over 46,000 ATMs through a fleet of 25,000 cash vans, which includes 267 dedicated cash vans to banks, 475 vaults, and it covers about 1860 cities and towns in the country. AGS journey so far. AGS was incorporated in 2001 but started off with banking automation solutions in 2004. It deploys products from international solution providers and established its own network and countrywide services. In 2009, it started offering ATM outsourcing and managed services. AGS Transact Technologies commenced offering switching services, transaction switching services, and cash management services in 2011 and 2012. In 2014, the company expanded the offerings to digital payment solutions, which is now one of the focus area of the company. In 2016, the company also entered into an alliance with ACI Worldwide, a leading international payment solution provider. Further, they have now 34 branch offices across India and an employee base of about 13,000 personnel, which includes about 1,500 engineers and about 6,000 ATM. The anchor issue of the company got a very good response from the anchor investors, with 17 anchor investors participating in it, and it was subscribed by renowned investors like Kuber India Fund, India Equity Investment Funds, Tara Emerging Asia Funds, Cohesion MK Best Ideas, and Autumn Investment and Infrastructure. Further, reputed mutual funds like HDFC Fund, Nippon India Small Fund, IIFL Special Opportunities Fund, Abacus Growth Fund by Sunil Sanghania, Quant Mutual Fund, and Resonance Opportunities Fund also participated in the anchor book. The response to anchor book looks encouraging. 1/3 of the total anchor book was allocated to 3 domestic mutual funds through schemes. Now we look at the financials of the company. The revenues of the company has not grown, have been tepid, and in fact going down year after year. This is a major area of concern. It cannot be alone due to COVID, and there seems to be some limitations in the growth in this area. The EBITDA of the company is also showing a similar trend. The net profit also has declined over the years, and the company ended this 5 months with a loss in its books. If we look at the EPS is 4.55 based on FY21 results, and the shares are being offered at a price to earning ratio of 38.45, which is not cheap. Price to book value is 3.82, and market cap of the company at the higher end is about 21,000 crores. AGS Transaction IPO has been hanging around for more than a decade now. In fact, this is the 4th attempt by the company at the IPO. This attempt is likely to succeed. PE investors, Actis and TPG invested in the company around 2012. Push for digital solutions and demonetization added to woes of the company and may have led to the delay, as there were concerns on future growth of cash segment. The PE investors were keen to exit, and in 2018, following demonetization and not so bright outlook for cash services, they pressurized the management for an exit, and the IPO chances of the company had dimmed at that time. So the company promoters raised fund to the tunes of about rupees 600 crores from a structured debt market route at a considerable higher price of 12% or more, and gave an exit to these PE investors who held about 42% stake in the company. Thus, the promoters acquired almost all stake in the company, amounting to about 97 to 98%. Post IPO, the promoters and the group will hold about 66% stake in the company. Some concerns remain on this IPO, mainly pertaining to high debt in the books of the company, which will get reduced post the IPO, but still will be at a higher level, and the debt equity ratio will be 1.1 to 1:1 even after this IPO. Company is taking a very different route, which is not common, to reduce the debt, which was essentially taken to provide exit to these PE investors in April 2018. The IPO proceeds, which is in form of an OFS by the promoter, will be used to liquidate company's rupees 650 crores CCPs in the promoter company. The proceeds of this will repay 560 crores of the company debt. NCDs which carry a higher interest rate of more than 12% and are listed on the NSE. The amount raised will be kept in the escrow account, and this deal is going to happen for sure. Government is encouraging to formalize the economy and reduce the share of cash in India's GDP, which is negative for the company going forward, as it's mainly still dependent on cash services. Overall assessment, debt remains a concern area for the company. Even after the IPO, it has to serve debt to the tune of Rs 75 crore annually. Currency circulation in the country presently is at an all-time high, maybe due to pandemic. However, going forward, the digital adoption is likely to accelerate. Government is also laying stress to reduce the share of cash in country's GDP. AGS Transact revenue has remained stagnant and has rather gone down since FY19, as ATM management and AMC services, which account for two-thirds of its revenue, declined by 12%, while product revenues dropped by 30%. ATM and cash management services are the cash cows of the company, which contribute both to the revenue as well as to the profits. The ATM margins have improved after the RBI allowed Rs 17 per transaction. Of this, Rs 14 comes to AGS per transaction when it is managing the ATM in outsourced model. Digital payment and cash management services have been catching up and reporting growth, but they together are about 27% of its total revenue as of now. So while the company is focusing on growing its digital payment solutions business, revenue outlook is hazy, as majority of the company is cash related business whose future is not certain. AGS Transact's net margins are lower than the peer CMS and SIS, and CMS is also a debt-free company. SIS also has very less debt and in fact came up with a buyback. Price to book value is in line with CMS Infosystem. It's in fact a bit lower, and same as SIS. Both are close peers, but SIS is in multiple lines. AGS Transact was active in the unlisted space and has seen a sharp correction, as it corrected sharply from a peak of 500 plus to Rs 170 to 180 at present. So this must have left a very bad taste for investors who invested in the unlisted market, thinking that it's a tech-savvy company. Currently, as much as 87% of company's revenue is recurring, of which 12% comes from digital. Recently listed CMS Infosystems is a leading cash management company, is trading at 4.4 times its book value, which is more than AGS Transact, but CMS has better profile, almost nil debt, and it's trading at a PE of 27.4x of its FY21 earnings, whereas AGS is demanding a PE of 38.5. So the offer is not cheap. Other peer SIS has more diversified line, has shown a CAGR of 13% for the last 3 years and posted a healthy ROE of 16 to 20%, which makes it a better bet in this space. Also, it has much larger presence in the overseas market like Australia and New Zealand. Finally, to sum up, whether to apply or not, risk is high in this. Expected reward is moderate loss or moderate profit. So thus it's a high risk but low reward situation. Reported GMP is Rs 10, maybe maximum at 15. Listing gains not sure. Hold for long term, not sure. I am not sure. Peers like SIS, I hold SIS and I like the company. Followed by CMS, maybe better. Subscription expected to be average, maybe helped as it's the first IPO in 2022 and could see good response from QIBs as well. I am not sure whether to apply in this IPO. If I apply, it will be on day 3 and based on demand for the IPO from HNI and QIB investors. Above are my views only. Please do your own diligence. Read the disclaimer carefully. All stock market investments are subject to risk and this should be borne in mind.